No long intro. Pattern recognition. Now, in this series, I'll be attempting to catalog some of my chart markups, and I'll be uploading them on YouTube for you guys, and hopefully, some of you may find them beneficial and perhaps help you in your understanding of price action like it does for me. And in today's markup, we have the E-mini S&P or US 500, depending on if you trade CFDs. But today specifically, I was mainly looking at this market early New York, so New York open around 7 a.m. And the framework, I was bearish, and I was targeting the relative equal lows. If some of you don't know, relative equal lows are probably hands down one of my favorite draws on liquidity when it comes to ICT's concepts. Nothing else can pull price like relative equal levels do, whether it's a relative equal high or low. I mean, they work so well, especially when you have the right ones within the right context and within the right framework, like you guys will see today. And it is important to note when you're framing these setups, high impact news events are very crucial. I didn't understand this until this year. I was always thought earlier on in my development to avoid, major news events like FOMC, non-farm payroll, and such. But I was never really, how do you say? I was never really guided into understanding that I needed volatility from some of these medium to high impact news drivers that aren't your typical CPI or PPI or non-farm payroll or FOMC. Like outside these four, they're the big four. Outside them, almost all the other medium to high impact news drivers work really well when it comes to framing setups. By far, one also a really good tool that I've added into my trading toolbox this year, and it's all been thanks to ICT. And even watching core content before it was on YouTube, he talked about it, but it never really resonated with me back then. It never really did as much as it does now. Understanding that you want those medium to high impact news drivers for manipulation to take place. We don't necessarily care or want to know what the numbers are, but because of the numbers, there's going to be a lot of traders because of their beliefs and fundamentals that will be flooding the markets with orders. And market makers tend to use those news drivers to manipulate, which is where if you're bearish, you want to see buy side liquidity or buy stops taken before you go short. And there's usually a medium to high impact news driver beforehand or right when that usually happens. That's when the market makers usually use news drivers like that. But let's actually take a look at the charts themselves. Now here first we have a 15-minute chart here depicting the E-mini S&P futures contract. Now blue line right here is delineating. This is previous week's. I believe this was Friday's high. So this is last Friday's high. So the markets the day before had already taken Monday's high, Tuesday's high. So in a sense, we've exhausted a lot of the buy side liquidity. Exhausted is a strong word. Doesn't mean these markets can't go up. As a matter of fact, they went even higher after this setup. But when you see this, it really helps to put, your framework to work. And for me personally, I always aim to have a hourly or 4 hour arrayed when it comes to liquidity. If I want to go short, I want to see an hourly buy side liquidity be taken. It really helps me gain way more confidence in my setup, knowing that, oh, the markets aren't just going to wake up and take my stop loss just to take out buy side liquidity because it hadn't already done that. So I always wait for that to happen first. So this is one of the first frameworks. This is like a layer. So we have this on the higher time frame. And in here, buy side taken again. Now this is on a shorter term, but this is buy side liquidity. It takes this, and I really like this swing high right here. I remember back when I was into retail a couple years ago, they had a name for this. This is a doji. I remember, I still got it, guys. This is the doji. I'm not sure what kind. I remember there was morning stars and bearish dojis. I'm not sure if it's doji or doji, but never mind. I don't really know what I'm talking about here. But this looks familiar. But no, this isn't. This isn't of any importance to us. But I like this swing high right here. Seeing this high, and lower high to the right of it. When we see this, this is set in place very well because on the higher time frame, buy side is taken, and this candle that starts the whole thing took this short-term high right here. Short-term buy side liquidity, it takes it, and now it's forming the swing high. There's no better swing highs when it comes to placement than this. You want this swing high to be exactly where it is right now, and price trades lower, and you can see forming this fair value gap. This is before medium, I believe. Yeah, this was a high impact news driver. So before this, heading into New York Open. So time of day is lining up. We have our drawn liquidity. Our bias is bearish because of what we just outlined here. And let's actually take a look. This is a 5-minute fair value gap in here. And one point I do want to make for you guys is understanding when there are those two gaps. I know I see mentioned this earlier on in the YouTube mentorship. When there are two gaps, he would use the first one, but be mindful of the second one. I can't do that. I really can't. Oftentimes, price would leave me behind because I want the second one. I can't. I simply can't really look at the drawdown, and putting my stop above here, knowing that it might trade into this. No. Usually, I would have my sell limit in here and a stop above right here. I can't do this, and you can see price actually drew into this 5-minute fair value gap. So it's going to all depend on your personal preference on whether or not you're okay with, taking some of this drawdown. For me personally, I'm not. And because of that, there's a price. I miss some of those moves where price trades into it and then it goes lower. But on a day like this works in my favor. Very little drawdown. And let's actually take a look. Let's go to the 5-minute chart itself so you guys can see exactly what I'm referring to. Here it is. So it's a 15-minute bearish fair value gap. I wrote bearish order block, but this is a bearish fair value gap. And what I do want to point to you guys is seeing that 5-minute fair value gap is inside a 5-minute bearish order block. Price action doesn't get any better than this. And I remember trying to log into my AMP futures account, trying to take this trade, but having to remind myself where there's FOMC around 2 o'clock, let me not. So I just marked it up and just watched it trade. Very painful to see, but being able to build a catalog and an archive of these sorts of setups, and I have a ton of them, guys. I have a ton of them, and that's why I decided, all right, let me share some of those and my thoughts on them and see how you guys like them and whether or not you guys want to see something more like this on a daily basis, if price action permits it. If the setup shows up and I marked it and I see it and I understand it, I'll share my understanding with you guys. If not, I simply won't post anything. But this is the second fair value gap in here, And if you are a big fan of optimal trade entry, If you were to draw your fib, I'll bet this is 61%, retracement level and into here. Very really nice trade. And remember, this is the main thing. This is what drives the show. There's very few times where I've seen relative equal lows in the proper context and price not trade to them, especially on the lower time frames. If we're talking about a 5-minute, 15-minute chart, I mean, relative equal levels, highs or lows, are like a gold mine, especially when it comes to trading the mini S&P futures. I've gone away from these markets over the past 3 months, but now with the way I'm seeing GU and EU moving, I'm likely to return, to these markets again. I remember maybe 4 months ago, I started live accounts to trade the YouTube mentorship model, and I think within the first month I had over 110% return. So I doubled my account using, you know, this sorts of framework, these sorts of trades, mainly based on around the YouTube mentorship. And you guys will realize a lot of the key points and key objectives when it comes to building this model itself it's pretty close to the YouTube mentorship itself. It's pretty close. There aren't any moving parts here. There aren't anything I'm doing different. So this could really be the YouTube mentorship if you wanted to call it that. I think it is. The only time I wouldn't refer to it as a YouTube mentorship is if I obligated to have price. If I wanted to sell, let's say above New York midnight opening, which I usually do. And in this case, it does apply because opening price was somewhere around here. So I was selling at a premium, and you really want to be selling at premiums. But for this specific model, it's not an end all be all. But when it comes to my own personal model, when it comes to getting funding and the verification I'm going right now, I make it a point to only sell above New York midnight open and buy below New York midnight open. But when it comes to trading the mini S&P futures, I don't necessarily have to be that hard on myself when it comes to my setups. So moving forward, I probably won't use that rule when it comes to trading futures, but I'll still keep it for Forex. So this is about it. Yeah, relative equal lows, big deal, very big deal. It's not talked about enough, honestly, and I'm not sure if that's a good thing or a bad thing, but we'll talk about it because they're very good. They are worth it. So with all that being said, guys, this is pattern recognition, and this is day one, and hopefully a lot more days to come. So let me know how you guys like it. I want to keep those short, sweet, and simple. That way you guys can actually take a look yourself, and I'll actually post the link of these charts in the description box if you guys want to download them and keep a catalog and start putting them together. That way you can have something to study when it comes to price action, because a lot of this is visual, seeing price. A lot of these things repeat, and once you see them enough, there's no exact number, but once you see them enough, it becomes second nature to you. You kind of see what price is doing, and it's one of the same reasons why, let's say you want to back test and forward test and tape read, because it drills it into your conscious and subconscious mind what price is doing, and all that plays in your favor in the long term when it comes to understanding price action. So I hope you guys have a wonderful night and good trading for the remainder of the week.